Hey everyone, and welcome to That's Right, the most anticipated earnings, the earnings releases to watch for the week of June 1st. We're going to get into this, talk about some companies that I'm really excited for this week. I think there's a couple really good ones that I'll be keeping my eye out for. I'll let you know what my opinions on or what their estimates are going to be, and if they're going to hit those marks, what the stocks will do. And we'll just go over a general brief overview of some of these as well. We start with Monday, and none of these strike me as super important. I know some of you probably hold some of these shares, but for my personal interests, these are not companies that interest me. You've got on Monday, Auto Home Incorporated, HH, Protalix Biotherapeutics before open, and then after close, you've got NGL Energy Partners, Enersys, and ProPetro, as well as Perceptron and CSWC. Not stocks that are necessarily too interesting to me as far as what I look at, but again, it's always a good experience for me to take a look at some of these things and, look at these earnings afterwards, see if there's companies that I actually do find interesting. So maybe I'll end up liking one of these companies, but we're going to go right to Tuesday and talk about one that I'm pretty excited about here as far as it's concerned. Dick's before open. I said I'm excited about it, but obviously I think it goes without mentioning the impact on physical retail has been astounding, especially when you think about the non-essentials. This is a quarter in which Dick's was considered a non-essential, and they were closed for a vast majority. All right, this is going to be at least probably 2 months of their quarter was completely out of business. So March and April, just completely out of business for this company. They weren't doing anything. So I think you're going to expect some horrific numbers, right? Earnings estimates on this, I think, are somewhere, average estimate around negative 50 cents of EPS. I don't think they're even going to hit that. I mean, if you look at other companies, look at a Kohl's, Macy's, what they were posting. These were companies posting a negative $2 EPS, right? And I don't think Dick's is going to just magically get under a negative $1. If they do, I'll be very impressed. And I do think that it's a good chance for this stock to stay where it's at. But otherwise, if you see an EPS miss somewhere in the negative dollar range, I have a decent feeling this stock's going to come down quite a bit. It's recovered a lot since its dip in March. It has recovered a lot, which is crazy for a company that was really not doing anything. I do think you need to think about growth online, because you're likely going to see around a 50 to 60% number as far as e-commerce growth for Dick's. I think they also obviously get hurt in the fact that there's no sports. When there's no sports, obviously people, they're not buying as much. There's good beneficial parts as this quarter is concerned as far as NFL jersey sales potentially. We talk about the NFL draft being part of this quarter for Dick's. So there's a good chance that really there's a benefit there as far as online shopping is concerned, but overall, I expect a pretty bad quarter out of Dick's, as you saw with the other really clothing retailers. And not to say it's really just a clothing retailer, but in the eyes of the government, clearly it was. Cracker Barrel, and I think you're going to find this one hit big as far as these other restaurants were concerned. It's going to get hit big. Cracker Barrel definitely. Not saying it's an old person restaurant, but not like I've been there, right? Just kidding. I haven't been there, actually, but we've all had their mac and cheese, right, in a box, whatever they got. So, I mean, it's hard to say when this kind of company was completely shut down for months of this quarter, how is it going to look? Obviously, you can assume it's going to look horrible, right? EPS is going to be very bad on this company. I'll just warn you that right now. I don't necessarily think they're going to be too far away from their earnings estimates, which are ugly. Revenue, I think, will be a miss, though. I do think they'll miss on revenue. I don't know where the stock price is going on this one, potentially. It's hard to say as far as Cracker Barrel is concerned, but I think you're going to expect probably a miss as the revenue is concerned. But EPS-wise, I can't give you for sure on that one. I don't know, but I do think that the revenue is going to be a miss. So where investors take that is really an interesting question. You've got Baozun, Donaldson, and Build-A-Bear Workshop. Build-A-Bear kind of follows in line with Dick's Build-A-Bear doesn't have nearly the online presence, though. I need to mention that like a Dick's Sporting Goods or a Kohl's might have. Build-A-Bear doesn't have the online presence. So my real question about this quarter is, do they build that online presence? Because that's what's really exciting about this opportunity for a lot of these retailers. If they can build an online presence and then afterwards still maintain that in-store presence, it's massive for them, right? That's massive growth lined up for them. Now, is Build-A-Bear a company I think that's potentially going to do that? I don't know. We think about quarantine and parents doing whatever it takes to keep their children happy and quiet. Does that mean Build-A-Bear benefits from it? I think there's a potential. You could see a potential increase in demand, but without them being able to go in stores and actually show the kid what's going on. That's the excitement of Build-A-Bear, right? When you're a kid watching your stuffed animal come to life, you make all the decisions, but buying it online is not necessarily the case. So I don't expect a great quarter for Build-A-Bear. After close, we have a major one in Zoom, probably the biggest quarter this company is going to post in really its history. I'll tell you that right now, as far as growth's concerned. As far as differential over last quarter, this is going to be the biggest quarter you'll see in the history of Zoom. I think it will be, even into the future, I should say. Really, because this is a company that benefits so much by the fact that this current pandemic is going on. This is a company that is at the forefront of it, and they absolutely benefit. Now, hear me out. This is not a very profitable company, right? We talk about EPS somewhere around the 8-cent mark, right? It's very close to neutral. And I think their EPS is going to miss this quarter. I do. I really do. Because I think the more increased demand, I don't know if I trust their margin right now. I don't trust their margin long term as far as increased demand is concerned. We also talk about some legal concerns with them having privacy issues. So I think EPS is going to be a miss for this company. Now, revenue, I think they're even going to beat the mean expectations as far as revenue is concerned for this company. And I don't know if it's easy to necessarily say where the stock's going to go. Just due to the fact that, well, I mean, it's already moved so much. This is a stock that's up, I mean, how can I say it? In the past month, up 30%. In the past 3 months, up 67%. In the past year, up 138%. This is a stock that didn't even really get affected by this at all. No dip down at all. So the question becomes, where's the valuation? It's really tough to say. Market cap's trading ridiculously high for this company. We're talking about a market cap that is 50 times the amount of their annualized revenue. It's absurd. I don't think there's any room for this stock to grow even higher, but we're trading in an irrational market, so I think there's a chance for it. It's a company well poised for the future, though, I will say that. I just don't know where the value is in the stock at this point, so I don't particularly have an interest in buying this before earnings because I don't know if it'll go up. It'll have to go down quite a bit before I ever consider even touching it. The stock has been a beast, and if you've purchased it before this, I'm very proud of you. Following this, we've got CrowdStrike, another very future-proof type company. We talk about cybersecurity. CrowdStrike's a very big name in that. So, CrowdStrike is I would, again, call this a future-proof type company. Not only we talk about just the increase in need of cybersecurity, we talk about threat detection, everything this company can do. Profitability is, again, the concern for this company. So, EPS-wise, are they going to hit or miss? I don't know. I do think they're going to see an increase and definitely either an inline or beat with revenue. I don't necessarily expect a miss for this company. I think the demand probably will have increased this quarter. Good year-over-year growth, probably somewhere around 70% as far as that revenue line is concerned. EPS is the one that it's so hard to tell with these tech companies because they really don't make much profit to begin with. A lot of these ones don't. These new startup ones don't. Can't really call this one a startup, but I'm going to just for the sake of this. They're in their infancy, I should say. So CrowdStrike, I can't give you an EPS number. It's another stock that's really just, it's performed well in this market, right? It's performed very well. If we look at it, this is, again, a stock that is up 50% in the past 3 months, 164% really since IPO, not even a year ago, almost a year ago, not even. So valuation becomes a concern on the stock like this when it's just been rocking through the pandemic without going down. So one thing to look out for CrowdStrike. Definitely look at those earnings, though. It's going to be very interesting. You see Digital Turbine and Healthy Equity. Ambarella is a chip maker. Chip makers have actually been benefiting quite a decent bit because of everything going on. Costs probably go up, so you're going to see an EPS miss for Ambarella. It's a stock I used to hold, but overall, I think guidance is going to be key for Ambarella, what it looks like afterwards for the next couple months. Now, I do believe this quarter might be a little bit of a dip. You're going to see a little bit of a dip just because of the supply chain getting affected so much. That'll affect their bottom line and top line. But I think the future is what really matters for this company. And as far as that EPS is concerned and what their guidance looks like. Then you got Ever and Medallia. Wednesday before open, we really have the last of one of these consumer staple stocks that a lot of people really know. And it's going to be Campbell Soup. So this is a company, again, very much benefiting because of the panic buys and the quarantine buyers. They should really have a very good number, and it's going to be a number that really you don't expect as far as that revenue is concerned. You need to consider the fact, though, that this panic buying has died down quite a bit. Now, and I work retail, and I'll tell you, demand for these products still has been pretty high, right? It's not like it's completely died down and people aren't buying anymore because they already panic bought. People are still buying the normal amount. It's just more people had panic bought previously. So I don't think you're going to see anything as far as a miss is concerned from the revenue number on this company. I think it's going to be a pretty good revenue and year-over-year number that you typically don't see out of Campbell Soup, right? And it's a very boring company. You see revenue growth of 1% to 2% a year. This time I'm expecting something like a 5% to 6% potentially. And it all depends. It was hard for sometimes to get product at the store. They were selling so much. So I do expect a 5 to 6% growth year over year as far as revenue is concerned, and just a good quarter in general. The stock's already up, so I don't know if it's going to go up. Nah, I have to add that on there. After them, American Eagle Outfitters. They fit in line with my theory there on Dick's. I think it's going to be a very ugly EPS quarter for this company. Very ugly. The question, again, for these retailers, as far as their stock price is concerned, is how that online presence holds up. Does American Eagle actually find a good online presence to continue to benefit? And if they do, then I think that investors might buy into these stocks. And these are ones that have been hit hard for the most part. Dick's somehow hasn't. I don't know how, but these clothing retailers have been hit very, very hard. Exceptionally hard. And these are the ones posting the worst EPS numbers. And again, it's going to be an ugly EPS number for American Outfitters. But, it just depends on that online presence, in my opinion. That's what makes investors buy or sell. After them, we've got Express, Vera Bradley, perfumes. Again, they're non-essential. Expect a bad quarter for Vera Bradley. Cinemark, bad quarter. Yunji, PXS. After close, we have a very exciting one in Cloudera. One of my newest positions, one I'm doing so far pretty well on, and I wish I had purchased more shares than I did. Take it as you will, because some people will not be happy, because guess what? I only hold 15 shares, I believe. Gotta look it up real quick. Cloudera, I hold 15 shares at $7.90, so overall already up 30% on the position. But I plan on holding it for a very long term. We think about cloud and how future-proof this company is. These interim quarters aren't ones I'm too really focused on. I'm focused on the very long term. So I want to see guidance for this company. I just want to see growth, right? EPS growth is definitely something to look for. I don't know if they're going to see it this quarter. I think it's going to be relatively flat year over year as far as their EPS is concerned. But I expect probably a 20 to 30% growth in terms of revenue. Very excited for Cloudera. Smartsheet, Elastic, Zuora, Guidewire, Tilly's, Change Healthcare, Grief, Comtech, and Fossil. None of these really excite me all that well. Smartsheet's a company I want to learn more about. Obviously, I didn't take the time necessarily to look at it this quarter. Haven't, unfortunately, at the time as of late. I have not had a day off of work in the past 2 weeks, so I haven't necessarily had the time to look at Smartsheet, but I'm definitely going to be looking at these earnings this week. I'll have a couple days off this upcoming week, so I'll be looking at that earnings report and seeing how they do. Definitely a company that interests me. Thursday, before open, you see Smuckers, and we talk about, again, the consumer staple type area. Smuckers is a beneficial one. You wonder, was jelly involved in the panic buying? And Smuckers makes more than that, but they're most known for their jelly. Jellies and jams. I'm going to jelly this. Never mind, I'll not finish that joke. But I think they are part of the panic buying, and trust me, I work there. I work with a company that sells the products, and I can tell you that Smuckers was part of the panic buying, so I think you're going to see a similar story to Campbell's, a better year-over-year growth in terms of revenue than you've seen previously for this company. I don't know for sure estimates on this one. I can't give you for sure, just because I'm not super knowledgeable about the business as a whole. But I will say you should expect a better year-over-year growth than you saw in the past at least few years. So definitely be looking out for Smuckers. Sienna after them. I like Sienna. Sienna's a company I used to hold as well. I don't have any good predictions as far as this company is concerned. But after them, Toro. Can't tell. Michael's, very interesting one again. We talk about an ugly EPS number, but we also need to talk about, is the online presence there? Michael's is such an interesting thrift store type company. The demand's high, mostly in person. Michael sees a lot of their business in person. Can they possibly translate that into online and digital sales? I don't know. If they do, you'll see good things for the stock, but it's been hammered, obviously. Justifiably so, because they're a non-essential, right? So they've been out of business. So, not bad, but I expect just, I don't know what the stock movement looks like on these type of companies. It's so hard to tell anymore with the crazy market we're trading in. We got SecureWorks, Orion, Duluth, going to get devastated. Navistar, and G&H Apparel Group. After close, one I'm very excited for in DocuSign. We think about definitely this current environment and how DocuSign benefits. DocuSign's a company, I don't know if you've partaken, but really it allows you to do a signature electronically it's a no-touch signature, right, for the most part, besides just a click, really a click of the mouse. And this is really the time. We talk about contractors going into businesses, work orders that need to be signed. All of this is going to get done digitally now, right? These companies aren't going to really allow physical signing. And DocuSign's really the leader in this as far as this digital signature is concerned. So I'm very excited for the potential business that they can bring up. And I don't know if you're necessarily going to see it this quarter, but I think this pandemic, personally, it definitely gets companies to a point where they're going to start switching over to a company like DocuSign, right, to do most of their signatures. Again, the hand signature still has a big part in all of business, but as far as the stock's concerned, I think it's trading a little bit high and mighty. We're talking about a 62% increase in the past 3 months, and it's because investors see really the benefit that this pandemic has for the company, and the long-term vision is there. I really do see long-term on this company, but overall, I don't know what this quarter looks like. I think the better part for DocuSign is going to be the future growth, not this quarter, but the future quarters when people start using DocuSign more. After them, Slack. I expect a horrific EPS number on Slack, but they always post a horrific EPS number. Don't worry. That's just how these IPOs run. Not a company I'm not touching the company right now, in my opinion, just because I can't guarantee what that EPS number looks like, and I don't know what investors are doing with these type of stocks. They are buying and selling them like freaking hotcakes. It is insane to see how these companies are trading. Then we've got Broadcom. I like the stock. MongoDB, Green Tree, Hospitality Group, Paper Duty, Gap. Now Gap's going to be posting a disgusting EPS number. We're talking definitely around the negative $2 range. I'm just going to be honest with you. And if they beat that, I'm pretty excited. But my estimate's probably around negative $2 for this company. I mean, they're just going to get hit hard. What can I say? And I don't think the Gap does not have the online presence to necessarily keep business going through this, right? They just don't. Then you've got Yext, NSC, and Domo. Finishing up on Friday with Tiffany & Co. and Tribune. Tiffany & Co. I did want to talk about because you need to think about these jewelry sales. It's a whole new ball game for these people. They're not even allowed to have people touching the jewelry anymore. So there's definitely a long-term effect beyond just being shut down in the short term as far as a non-essential is concerned. There's a lot of long-term impact because of this. I honestly foresee a couple months in which they're going to see a big decline in terms of excitement for their products because people can't try them on. When you can't try stuff on, got to be honest, especially with an item like jewelry, if you can't see how it looks on yourself, I don't know if you're going to be buying it. I mean, that's just how that works. Really visually seeing an item like this is important. Same thing with like furniture. You need to physically see it in the space, and that's how you really make a good sale. So Tiffany & Co. I think is going to get hit hard. Not only this quarter, but I think the following next 2 quarters will be bad for Tiffany & Company. And you got to think about, are there a lot of marriages happening right now? No. Does that mean a lot of proposals are happening? Debatable. I know of a couple of friends that have gotten proposed during this, but it's just hard to say necessarily what this looks like. But I think it's going to be a bad quarter for them. I do hope you enjoyed this, and that was the earnings report for the week.